Oh, okay. So Dave says, I'm part of the not exactly default screens, but the sample searches. And he says, regarding the safety first bull call spread, can you please give an overview? Absolutely. So we already saw in the search on calendar calls how we had that default screen set up and we made some changes. That's in the search tool. So if I go to Bull Call Debit, we'll go into search. And again, as I mentioned, we have default criteria. There's this Bull Call Debit number 1. It's a monthly screen looking for debit spreads about 1 month out in time. This is looking for higher probability positions, slightly in the money, 10% in the money. So most of the probabilities here are going to be that 85, 87, 88, 90% range with still some reasonable returns if you can get filled at the midpoint prices. But naturally, they're lower. I mean, there's two ones out here. Wheaton is probably a wide bid-ask spread, and it's probably not realistic to get a 42.9% return, 10% in the money. And that's just probably what came across over the exchanges at the end of the day. A good 14% here on Freeport. And what I'd expect more or less, this higher probability, 10% in the money, even 1 month out, 8%, 6%, 7% returns for a debit spread. I know that doesn't sound sexy, doesn't sound overly attractive, but it's more safe. The stock criteria being used on this default, looking for stocks in an uptrend, relative price, you can always change that, but stocks that have a good positive earnings per share growth with a PE ratio of 0 to 70, and of course avoiding earnings between now and expiration, which we tend to do with any leverage spread. And other defaults there, the bull call debit with leaps, looking further out in time, far out in time. Initial values, similar, but not as deep in the money, a little bit riskier. And of course, then we've got the weekly bull call debit spread search. Now, in addition to our default searches, in every strategy, you'll see the sample searches. These are theme searches where you say, okay, this one is too deep. The three bears, so to speak, Dave. This spread, I get, this search, I get it. They're going deep in the money, 10%, high probability, but the average return is really low. I want a little bit more bang for the buck. Let me see what they've got with this initial values default screen. Oh, there we go. Now I'm looking at 70% probability, 48% return. General Motors, maybe. Bank of America, I don't know if I'm in the banks right now. Pan American Silver has been strong, but it's been all over the place. Amazon, okay. Dutch Brothers, I don't know. Coupang, I don't know. FTAI Aviation, not familiar with. That kind of thing. You're saying, okay, good numbers, but where are the stocks I want to see? Why am I not seeing good spreads? Okay, we've got Amazon. We've got Alphabet, of course, big names in there. But why am I not seeing some other big names? Where's IBM? Where's Apple? And then there's 58 results. They might be on another page. But I say, I want the bigger, well-known stocks, maybe some Dow 30 stocks. All right, so let's go to sample searches now. These are themed searches in each strategy. So here we have the ETF bull call debit screen, the 5-star bull call debit spread search, looking for what's rated 5-star stocks. And then there's the safety first bull call debit spread. What is the benefit of this position? Well, there we have Amazon, there's Delta, there's Apple, there's Exxon. We know every name. Oh, Coupang. Okay, I lied, Dave. I don't know Coupang. Ball Corp, I do kind of know. Wynn Resorts, Nike, PayPal. What is the difference between the initial value search we saw with the higher returns or that deeper in the money bull call debit spread number 1 search that we saw? Well, now we're back to higher probabilities again with lower returns. But even in those ones that are the 80% return, we're still barely cresting 10%, where we were seeing spreads on that other list that were at a 75, 78, 80% probability above that were showing 25, 35, and 45. These are large cap stocks. Okay. It's only 5% in the money because with the large cap stock positions that we're looking for, in this case, similar criteria, but with using that larger cap, seeing the names you recognize even more on a general basis, they're going to be lower volatility. You're going to have a lower potential return, but they're the large cap stocks, which may, of course, see a movement around earnings or other events, but in general, the moves are going to be more muted. That's why it's called safety first, because not only in addition to going with that probability of greater than 75% above based on the past trading range of the stock, going 5% in the money for some safety as well. We're also looking for the market cap of over 10 billion. With, again, still the good earnings per share growth, avoiding earnings between now and expiration, and a relative PE ratio, and of course, a strong broker recommendation. So these are not the more volatile companies. These are not the more leveraged returns, Dave. This is looking at the higher market cap in those situations. You see names that you recognize right off the top of the bat: Amazon, Delta, Apple, Meta, Royal Caribbean, Visa, Microsoft, Wynn Resorts. Let's go to page 2. It's going to be more of the same. Alphabet, Freeport, McMoRan, Southwest. Oof, they had a rough one, didn't they? Boston Scientific, Airbnb, Morgan Stanley, NextEra Energy. Okay, so only about 2 or 3 stocks on this list I don't recognize off the top of my head. Coupang and that KKR position. Everything else is known. And we go back, of course, to the search. I'm sorry. Let us go back to that initial value screen. Is that where we were? Yep. And again, higher returns, not as high a probability. Even here, 86.4% on Dutch Brothers at a 33% return. Those on the safety first. Higher market cap, lower implied volatility, lower return, but less likely to show wild movements. Let's take a look at Dutch Brothers, what it's done recently. Why is this standing out as something with a high probability? Yeah, there you go. Okay, most of the stocks we saw on that safety first list haven't moved from 28.50 up to 36 in the last 3 days. So that's why we're seeing a great Bollinger Band breakout, positive MACD cross, but that's all due to some kind of earnings jump one way or the other here. But it is back up to where it was after a large decline. About 2 months ago, it's been this 35, 36 range, had a large dip here and then bounced back up. Higher volatility, more volatile position. That's why it's giving the better return, even with that 86.4% probability, as opposed to those we saw in the safety first, which we're seeing again, 6, 7, 8, 9% returns with still the 85, 86% probability. All right. Range in the money was relatively the same, but of course, that's the gambit you have there. That's the difference in these types of searches. These ones are looking for more returns, a little bit more aggressive. The themed searches in each strategy are designed that if you want to be a little bit safer, you want to go further out in time, or even here, this out of the money, out in time bull put debit, sort of the at the money, at least 60 days out in time for that closer to 1-to-1 risk reward ratio. And of course, the ETF search as well. These are theme searches to use as a starting point, Dave, as a stepping stone, just like the main search screen, in order to help you find the positions that best suit your needs. Whether you want to be more safe, still get a good single, potential double-digit return 30 to 40 days out in time with a good probability on less volatile stocks, or if you want to gamble a little bit, take a little bit more volatility, look for more of that double-digit percent return, still having a good 75, 78, 80% probability. We can see that in the initial value screen here for the Bull Call Debit Spreads. Same thing you see in the Bull Put Credit Spreads as well. And the sample searches under Bull Puts, I believe there's the safety first screen there, similar to what we just saw. Monthly picks of the day, safety first, Bull Put search, absolutely.